It is 18 minutes past 8 in the morning on Monday, the 11th of May. So while we're all under lockdown and while there is such a crush in physical economic activity going on throughout the developed world, there's a very interesting event that's going to be going on in cyberspace. So while everybody is looking into their screens all the time, where we have little to do but look at our devices and plug ourselves into the internet, we're going to actually have a major event occur in the Bitcoin space. And of course, I'm referring to the Bitcoin halving. This is where the supply of Bitcoin is cut in two as a result of its own maturity. It's a very cyclical event, a bit like the winter solstice. And of course, if you've been reading much of our work in recent days, we've written an awful lot about it. And of course, it creates a lot of commentary, a lot of debate over what this really means. But on today's market broadcast, I've brought on Charlie Morris, who is an editor here at Southbank Research. He writes the Fleet Street Letter and has a very interesting view on Bitcoin. He's been looking at it very closely for quite a long time. And in fact, created an entire sort of Bloomberg terminal that anyone can use to browse the Bitcoin. It's completely to browse the Bitcoin blockchain, I should say. And it's completely free for anybody who wants to use it. It's byte.tree.com, B-Y-T-E tree.com. And Charlie has been, as I say, he's been studying this for a long time, and he's been using the data that is produced by the Bitcoin blockchain to allow anyone to try and take a look under the bonnet of the network, as it were, see how many transactions are taking place, see how much, whether or not the Bitcoin miners are selling or whether or not they're hoarding their Bitcoin, all manner of metrics you can find on ByteTree. And as Charlie has such a unique take on the asset space, I thought it'd be good to get him in on today's market broadcast, what with the halving ahead of us and all. Charlie Morris, thank you very much for joining us here today. Could you let us know what you think is going to happen with the Bitcoin halving? Why it is that you see, how it is that you actually look at Bitcoin, whether or not it's an asset or a currency and the like, and what exactly you think, what exactly you've been doing with ByteTree as well.
Yes. Hi, Baz. It's basically, it's a kind of inevitability about Bitcoin, because if you think about what the internet has achieved since we first heard about it in the early to mid 90s, and where it is today. And I remember sort of having a dream at the end of the 90s, along with everyone else who was following the stock market at the time, that the internet would just be amazing one day. And the disappointment was it took another 10 years before, till about 2010, with the smartphone becoming widespread, before interesting things started to happen. And then these internet companies started to make a fortune, and that's where we are today. So it took about 30 years from start to finish, and it keeps moving into different areas of our lives. And I think that the idea that it's going to take on assets, money, its own economy, etc., is just part of the inevitable journey of the internet. And so when I became familiar with this space 7 years ago now, I just got very interested and thought, well, actually, this will be mainstream one day. And so I thought I'd get amongst it.
Right. I remember a while back you said that Bitcoin represented the idea that the internet has finally discovered how to transact value. And why this was, so important, because of course we've seen the internet take on so many other more traditional institutions, sort of traditional means of exchange, traditional sort of distribution networks and the like. And you were saying, how long is it until the internet has a crack at money? What do you, in terms of Bitcoin specifically, because Bitcoin was really sort of the one to make crypto more mainstream. How is it that you view it in regards to its scarcity model, the halvening, of course, which comes on today, all this kind of thing? How is it? How should investors try to value it as an asset?
Well, there's about three questions there. We'll touch on halving, sorry, and we'll sadly everyone calls it halvening, and we'll also move to the other point about valuation. Before we go there, can I just describe why I think Bitcoin's interesting in the context of digital assets?
Go for it.
And if you sort of imagine in the currency market and think, okay, who's top dog? It's the US dollar. Look at the commodity market. Who's top dog? It's gold. Look at the bond market. The top dog is the US Treasury. And we can keep going here. And obviously in the stock market at the moment, we think about the S&P 500 and the FANGs and so on. So this is sort of the reference point of what sits at the top of the food chain, then the asset class. And in crypto, Bitcoin sits at the top. Now, underneath it are several thousand tokens. Many are worthless, many are junk. We know that, but some of them are very powerful and some of them are very real. And I assume in the next 10 years we'll have many more very powerful, very real assets. And at the moment, I think that if you start to replicate business models underneath, existing software models and internet business models and so on the internet, but you replicate them in the crypto space, you create value, and that value is reflected through the price of Bitcoin because it's really at the top of the food chain. So if you make some money in a token, you can't really cash it in for dollars because there's no liquid market, but there is a liquid market between any token and Bitcoin itself. So Bitcoin kind of sits on top of what is aspiring to become the crypto S&P 500, if you like, of lots and lots of small businesses and ventures, which will do great things in the future. So that's why I think it's the gentleman's trade, because you literally are just buying into a growing economy rather than worrying too much about the individual tokens, some of which will do very well, by the way. And and in that guise, how to value it, which is the natural flow from that, is, well, the size of the network is the value of Bitcoin. And so if Bitcoin has got loads and loads of companies it represents, and loads of traffic and loads of turnover and all that sort of thing, then Bitcoin is very valuable. But if this whole space comes to nothing and none of these companies do well and we all lose interest, then Bitcoin's worth precisely nothing. So and the final question was about halving. And so there's a couple of points here. The first is that asset, if an asset wants to be credible, then it's got to have some sort of limited supply. Now, you could argue that the dollar's not doing too much of that at the moment, but there are good reasons for that, because the economy is imploded because of COVID. So the newly created dollars are offsetting the destroyed dollars, if you like, in very, very simple terms. So the net is not nearly so big right now. But if those dollars come back in the future, then we'll have too many and we'll have inflation. Now, I'm simplifying a half an hour conversation right there, but just bear with me. Now, in the case here, a credible asset has some sort of scarcity. That doesn't mean it doesn't mean to say that if you have a wonderful art collection, that by burning your paintings or half your paintings is going to make the other half more valuable. I think that's when it starts to get ridiculous, these arguments. But clearly, if Van Gogh had a production line and had hundreds of thousands of the same work, then that wouldn't be as aspirational as if it was unique. So there are some arguments here about scarcity, but I think the main point is that if you've got low supply growth, and Bitcoin at the moment has an inflation rate of 4% a year, which means the supply grows by 4% a year. Now, as of this evening, that will drop to 2%, and in 4 years' time, it will drop to 1%. And very approximately, gold's long-term supply growth is about 1%, slightly over 1%. So in 4 years' time, Bitcoin and gold are going to have well, actually, Bitcoin will be slightly lower than gold. But I don't think that matters. The point is they're both low numbers. And so that means they're credible assets, and that gets them into the room, and that's why we're going to talk about them. If the gold supply was rising by 50% a year, we wouldn't care about gold. It wouldn't be particularly valuable. It would be priced more like copper or silver rather than the precious metal that it is. In the case of Bitcoin, we have confidence in the future supply, which is very, very important. But the value comes from the utility I described earlier, about the network, the underlying strength of the network that it reflects. So all the underlying businesses and all the transaction activity and everything real. And I come back to WhatsApp. I don't know if you remember, but a few years ago, Facebook bought WhatsApp for $18 billion. And at the time, most of us thought that was a bit ridiculous.
Yep.
But now we look back and go, my God, you've got the world's attention for $18 billion. That's a bit of a steal, really, isn't it? I think you've got to understand the power of a network effect and what it's worth to have the world's attention, bearing in mind how difficult it is to get anyone's attention these days. So, and the final point on halving is it's my belief that low supply growth gives you credibility, but the actual act of halving itself doesn't impact the price.
That's lots to unpack there, Charlie. In terms of going to that network effect that you described, you're definitely the first person I've ever found who's been analyzing Bitcoin specifically using its network effect as a proxy to discover its value. And I always found that very interesting. In terms of because of course you've set up Bytetree.com, which is sort of a Bloomberg terminal for Bitcoin and for a few other crypto assets as well. And the whole sort of premise of that is to be able to look under the bonnet with Bitcoin and see exactly what's actually going on within the network, as you described. That should point you to where the what Bitcoin's value actually is at the moment. In terms of what's been going on in the network itself, is much that you've been looking at that's been happening in the last few weeks. that's pointing to anything that we might expect from Bitcoin in the future?
Yes, there's obviously it's been quite an interesting year for Bitcoin. I'd compare it to asset prices in general, and Bitcoin is ahead of most things this year. I would specifically, some people would compare it to gold because of the supply side comparison that we described, but actually the demand side is completely different. So I don't think it's particularly gold-like. The reason why people are picking up correlations at the moment is because everything's correlated in a fiery market. We've had the crisis and so on, so everyone went down together and everything goes up together. So there's a lot of coincidental correlations that will pass, but nonetheless, some that stand out are unsurprisingly internet-related speculative stocks, and and I think those stick because certainly my work suggests that internet companies and Bitcoin have been highly correlated for about 8 years. Now, it doesn't pick up in the maths. So if you do look at correlation mathematically of which days they rise and fall, then there is no link. But I would say that the reason for that is because Bitcoin's traded in a completely different infrastructure to how traditional assets are. But when you look at the big picture and perhaps get a 3-year-old to help you here because it's so obvious, 2012 and 13 were big up years for both tech stocks and Bitcoin. 2014 was a savage bear market for tech stocks and Bitcoin. 15, 16, 17 were all great years for tech stocks and Bitcoin. 18 was devastating for both. So this is the elephant in the room. And then 19 they were both okay, not particularly interesting. And then we had the COVID crisis when they started to go to a very, very high correlation, which is very clearly readable in the maths, as the Bitcoin infrastructure comes slightly closer to the traditional financial world. So, to my mind, internet money, internet stocks, why aren't they correlated? Well, they are. I mean, it's quite simple. So they should be. And so, it's all about demand. It's all about network effect. And halving has got nothing to do with anything. And we just celebrate the fact that Bitcoin has low supply. I mean, Paul Tudor Jones has put out a very good piece over the weekend, which no doubt is all over social media, and no doubt Southbank will probably push somewhere. Yep. And he's just making some very, very good arguments about this, saying he likes the tight supply, but he doesn't mention halving as a price creating factor. He merely mentions halving as something that gives this the Bitcoin's the long-term scarcity, which doesn't create value in itself. It's more the opposite. The idea of printing lots of Bitcoins would destroy value, but that doesn't mean to say that creating fewer creates value. It merely maintains value, and there's a big difference there. And if we look at the best currencies in the world, like the Swiss franc and the Japanese yen, we don't expect them to go up. We don't buy the yen and the Swiss franc as speculative, exciting vehicles. We just see them as better value stores than our own currencies, and that's the point. Low supply growth, halving, etc., creates stability and certainty. What it doesn't do is create value.
Charlie, in the context of the lockdown and how internet stocks, have done incredibly well in the last few weeks, as we're all just stuck inside and we have very little to do but interact with our devices and, of course, use the internet. I noticed the other day that FDN, which is the First Trust Internet ETF, is now at all-time highs all over again. So it's fully recovered from the crash in March, and it's just marching higher and higher. Do you think that this is? Do you think this is going to continue after the lockdown is over? So, do you think these, the amount of juice that's been injected into these internet stocks, and of course, as you say, like Bitcoin, do you think that's going to continue if the lockdown is lifted, or do you think this is sort of a transitory thing that is simply the market pricing the only thing that is the only activities that are going to be earning money during this time?
That's a very good question. I think it's a bit of both. I think the animal spirits have come back in a spectacular way after COVID, and racy stocks are doing really well. When people are scared, then racy stocks tend to be, bid down quite aggressively. But when the animal spirits are back, and by the way, we've had a lot of fresh money into the system, so that would probably be why. Then racy stocks tend to do pretty well. And I think that the trade-off at the moment that we're asking is that the real economy is in one group, and the real economy would be Carnival Cruises, EasyJet, restaurants and train companies, everyone who's really suffered, particularly the leisure and transport sectors. And how are they going to fare when we go back to work? And the answer is probably quite well, because their stocks are really cheap, and one can only assume that there will be a return to work, even if there is a difference in the way the world behaves. But certainly, the Japanese, Chinese, Koreans who have been living with viruses for or the threat of viruses for a lot longer than we have, continue to have some sort of normal life. So, we will get through this, and I assume there's a lot of value in those sorts of areas. But it's also this other side of it, which is we recognize there's going to be a lot more video conferencing and internet activity. The COVID crisis has been an absolute gift for the internet. What I was saying earlier was that in the late 1990s, the internet was a great dream, but it didn't actually work. It started to work in about 2010, and now, by God, it works really well. And so this thing, that realization that not only have we got the capacity for it to do great things, but we're actually going to use them. But so I think there'll be a sort of push me pull you between the old and the new economy. We always have this. We had it in the late 90s. It's not a new argument. I think we had it in the 1920s, actually, with stocks like radio and so on. So you've just got to assume that the world does go back to work, and there's going to be lots of money made in the old economy stocks, and in this new economy stocks. They are going up right now, but I guess it doesn't last for that long, because these things can move quite quickly.
With that in mind, then that could be sort of a tempering effect on Bitcoin as a whole. But Charlie, thank you very much for showing up today. I know you've got a very booked day, as today is the halvening, and you're hosting a halvening party, as it were, with ByteTree. Could you give our listeners an idea of what they can expect from your event you're hosting tonight?
Certainly, thanks for the opportunity. So ByteTree, spelled with a Y, B-Y-T-E, as in a computer, bytetree.com. The details are all there. But essentially, we've got a proper show tomorrow night with about 9 guest speakers, some really good ones. And so we're going to analyze the aftermath of the halving. So having given the market 24 hours to digest. And I think we're doing a quick live show tonight, and it's looking like I've got my live clock. The problem with this, you don't exactly know when halving's coming, but according to this, it's 10 hours 44 minutes and 34 seconds, which puts London at 19:19. So that's 19 minutes after 7 p.m. tonight. So I don't know, that's just after EastEnders. I'm not quite sure. I don't watch EastEnders, but that sort of time. And we'll be doing a quick live show. All the details will be on the site, and you can sort of sign up and watch us or watch it later. But it is quite a fun day for crypto nerds. It doesn't happen very often. I call this the blockchain Olympics, once every 4 years.
Yes, a very apt description indeed, and it'll be very interesting to see what the fallout of all of this is, and whether or not what the halvening is, if the halvening indeed does change sentiment around crypto. But we'll all just have to wait and see. But Charlie, thank you very much for joining me today.
Thank you, Boaz.
That was Charlie Morris over at the Fleet Street Letter. And as he described on the call, he runs a very interesting website called bytetree.com, which is just like it's almost like a Bloomberg terminal, but for the Bitcoin space. And it allows you to take a look into all of the interesting stuff that goes on under the hood in Bitcoin, because Bitcoin runs on a public blockchain, which means all the information, all the transactions within it are public, and anyone can browse it. Now, of course, because it's such a vast amount of information, it's very hard to pass it through. But with ByteTree, you can actually see what's going on underneath it in incredible detail by yourself. And for the moment, it is completely free. So do give that a look. But that sums up today's market broadcast. I shall be back indeed tomorrow. But today's halvening, hopefully it'll be we'll see. We'll see what will happen. It'll be very interesting to see just how everyone reacts to it. It would be very sort of 2020 if the Bitcoin price collapsed after the halving. I don't think it'll be quite so dramatic as that. As Charlie says, I don't think the halving will be such a huge change to the price itself. It's more a sort of structure of the Bitcoin market. But we shall have to see what happens. That's all for today. Thank you very much for listening, and we shall be back again tomorrow.